Agarwal, founder and fund manager with Papa Secret joins us, and we've got Mohit Rana, partner with Redseer. Gentlemen, good morning to both of you. Thank you for joining us. Mohit, I'll start with a very basic question, and this is meant for our viewers who are watching this show. Is it worth really walking on the path of investing via the unlisted route? See, for qualified institutional investors who understand the risk, who understand the profile, who have patience, maybe this is a great idea. But for our audience who has limited capital and not a very deep understanding of the unlisted space, how is the risk reward proposition?
Yeah, let me talk about the startup space. That's what I understand much better. So clearly a lot of interest in angel investments over last many years. And while some people have made money, many of these investments haven't done as well. So I think as you make an angel investment, you need to realize that this is money you are putting in as a experiment, for want of a better word. So don't put money which you can't afford to lose in that. It's something you want to do because startups excite you. You want to play in that space and you want to just understand the sector a little better. But definitely it's a high risk proposition.
Abhay, there is a success of CSK, a company which you track, but there is unfortunately a sad reality when it comes to API holdings of PharmEasy. What is the right way of looking at this space?
And to all the viewers. So you're absolutely right. I think what has happened is that over the last 4 or 5 years, I've seen the unlisted traded stocks, that whole space has become very vibrant. From very low liquidity, we saw some of the marquee companies coming in where retail investors could participate, even though these stocks were not listed, they were traded very aggressively. And there were a lot of success stories also, Nikunj, like ICICI Lombard. I remember pre-IPO shares were trading, HDFC Life, which IPO'd, and a lot of other IPOs that came in listed. Their stocks were available for retail investors to buy much before their listing. So what happens in this space, Nikunj, is that there is a valuation asymmetry because of lack of information. You take an example of PharmEasy or Reliance Retail. Once the price starts going up, investors start seeing price as the value, because there is no way to decipher what is the real value. And I think that is where some people get burned. I would say that, for every PharmEasy and Reliance Retail fiasco, if I can use the word, where investors have really burnt their fingers, there are enough success examples also. We saw recently a company like Anglo-French, which was trading at 4,500, come in and make an open offer at 3,100 to its investors. We have seen companies like Mohan Mikins, Tata Technologies, giving handsome return to their investors. So I think it is really for retail investors to use the same discipline that they use while investing in public markets, even though information is not as readily available, to make their bets and not just be driven by price increase as a measurement of value. That is what I would say, Nikunj.
Nimesh Kampani also joins us. Let's connect with him. Nimesh bhai, good morning. Thank you for joining us. In the last 4 months of this comeback equity market for the listed space, what has happened in the unlisted space? Has the unlisted space, Nimesh bhai, got re-rated? If yes, which are some stocks where the re-rating has been massive?
So Nikunj, I think the way the markets move in tandem, right? So of course, public markets will always be at the forefront and be the barometer, and then the private markets follow that. So, and private markets have now 2 parts. One is the unlisted space, which is where a large part of companies get traded by a certain number of brokers in the country, and retail gets to participate in that. And the other is the startup ecosystem, as you speak, because there largely you have institutional shareholders and trading doesn't really happen much. And of course, unlisted space, when people started discovering that maybe around 10 years back, you would see value buys, right? So you would get companies like Star Accessories at around 5 times earnings. RBL Bank was very cheap at that time. HDB Financial was very cheap. Today, what has happened is that all of these stocks are completely discovered as good as a public market stock. So they are completely fully priced. What remains to be seen in there, which is where people would be making money, is event-based opportunities. So most of them, the main event that comes around there is an IPO. So when an IPO is about to come, these stocks really rally up pretty well. And we have been seeing that time and again in many of these unlisted stocks that around the IPO, if an IPO paper is filed, the stock price just goes up because of liquidity on the anvil, right? So I think that is what you see in the unlisted space. It has been quiet for quite some time, but you started seeing again momentum coming back there. And more people are getting into that space. And if we go down to the private markets that we call the startup ecosystem, I think liquidity is again slowly coming back, surely and slowly coming back. You are seeing more and more investments being made. I think the winter was a correction period. It still continues a bit, but good companies with good fundamentals continue to get the funding.
Given that the report is stating that from Redseer that the unicorns are projected to grow in India from the current 30 to over 55 by FY27, given that we've been on an absolute roller coaster ride, what's the outlook in terms of these companies becoming profitable down the long run? What's driving that confidence?
Yeah, so I think what a report said is currently about 30% of unicorns are EBITDA profitable. And we do see over 50% of them getting profitable by 2027. What's driving that profitability is I think over last 1 year, once the funding started drying up, companies have made a pivot from growth to profitability. It's still a bit of work in process. So I think it will take 2-3 years for companies which have good fundamental business economics to start to move to a EBITDA profitability model. At the same time, their report also says about 20% of unicorns will struggle even over 4 or 5 year horizon to get profitable, because fundamentally the market they're addressing either is too small or the unit economics was so driven by discounts or funding that a business case prima facie does not exist on the current trajectory. So they need to either significantly change their model, or some of them may actually may not exist, to put it bluntly, after a few years' time.
So let's put you guys in the spotlight then. Abhay, let me start off with you. What are your top unlisted ideas right now?
I would say, looking at the unlisted space, what looks very appealing is a company like Mohan Meekins, because it is a company that has a very marquee brand, where the volumes we have seen on the basis of the annual report and the quarterly numbers they share, that the volumes are growing up, they have good pricing power, they're expanding the product range. And the stock is very, very attractively priced at about less than 20 times P multiple, compared to its listed peers that trade at more than double of that. So I think that is one idea in the unlisted space, and it has not been hit by any price speculation yet. The price has increased steadily. So that is one thing which is attractive. The other one is Tata Technologies, though the stock in the private space has gone up by almost 10 times, from its lows. But still, I think there is a lot of juice left, and it is a candidate for listing earlier than later. And then there is HDB Financial, a very large NBFC, which has struggled, and the price has taken a hit, in the private market. But I think, again, somebody looking to play on generating a return when the stock gets liquid post-IPO, I think this is another good bet, HDB Financials.
Let's nail it down. And I'm assuming that you would have an indirect or a direct vested interest here. So I'm perhaps speaking the disclosure on your behalf here. Mohan Meekins, which is a liquor company, you like it. HDB Financials, which is part of HDFC Bank, which was the leasing business, which was supposed to go public, but because of a lot of other factors and merger, I think it has not got public. You like that one. And which is the third one you mentioned?
Tata Technologies.
Okay, Tata Technologies has already filed for an issue.
Yes.
And that is the other option where things look interesting.
Yeah.
Nimesh, over to you now. In the unlisted space, if somebody is genuinely looking at, can genuinely digest volatility and has a long haul time frame, what are your ideas?
It's a very simple one, and the disclaimer: I'm invested. Go for NSE, right? I think NSE is something is a generational stock. It's a high dividend yield stock, and it's a complete cash cow. So complete operating leverage business, pretty safe. So NSE will be my easy bet here.
Mohit, the same question.
Yeah, I think in general, companies in among the startup space, companies in lending, which have, and many of them are now getting profitable, which have figured out their underwriting model and have NP under control, and there are quite a few of them out there. So companies in the lending business, by and large, they have a huge runway ahead. The market, they've just scratched the surface. There's a huge market out there for, small ticket loan size to individuals, to SMEs. So they should do well for a long time to come. And then, of course, there are SaaS companies, particularly those targeting the US market. Those are doing well by and large. And so these two are, of course, doing well. Gaming also was a great opportunity right now, of course, a bit of uncertainty post the GST changes. But gaming is also very high cash business, by and large, profitable, and again, a long runway ahead from here on.
You didn't specify a name, Mohit. I mean, buying into SaaS technology startup, it's like a very broad statement, isn't it?
Yeah,
That's like I'm bullish on India.
The challenge is it's not the stocks are not very liquid, so you can't just go out there and perhaps buy into. But there are many of them out there. One will need to, and there are not so much for a retail investor, perhaps, but in general, I think the opportunities in lending and SaaS are. There are multiple opportunities out there. One will, I don't want to get into specific names right now. Many of them are clients, I would say. So we are not an investing company, but we do consulting for many of these clients.
Gentlemen, for joining in. It's been interesting getting your views on the unlisted space as well as those top recommendations and some of the companies that are on your radar, given that this space is brewing quite significantly.